think the inverse to the business cycle being so low for so long will be the flip side of this cycle will be longer than people expected, because we've got this slight dislocation still working through post-COVID that then extends the business cycle. You know, we don't know yet, but it feels like it's Q2 2024 so far. But if financial conditions keep moving, if they really have done some sort of Mar-a-Lago accord and they get the dollar below 90, okay, then we're going on further. Yeah, maybe it's a full bubble cycle then. Maybe we don't get who knows? But, you know, one step at a time. But looks good.
Bitcoin Zella stands out with its simplicity and clarity. We've crafted an experience that anyone can dive into, whether you're a crypto expert or just a new to the crypto world. Now, guess who keeps his eye on us? The author of best-selling book Rich Dad Poor Dad, Robert Kiyosaki. And we want to take this opportunity and thank all the people who trusted us, and we read every comment. And the best part, it's free. Subscribing now means you will get all new information for free. Don't just follow the trends, stay ahead of them. Subscribe to Bitcoin Zella today and enjoy the new edge. In this video, Raoul will talk about crypto lead in Bitcoin. Let's catch him up to know more.
Basically, GDP keeps falling, and it's falling over time, the trend rate of GDP, because of the magic formula. And Julian, if you can get to the demographics charts, because they're the key ones here. The issue is here, the biggest secular factor in all of markets is this one thing, is the aging of population. And we can see the births rate is falling in the US much faster elsewhere. So that obviously is a function, the labor force participation rate, the size of the workforce, is a function of births, deaths, or the number of people being born, whatever, right? And you hear the phrase demographics of destiny. They are. Until the AI and the robots come, which are basically artificial humans, this is the problem that faces us all. But there's a way that they've got round this. If you go to the next chart, is they've increased government debt to offset the declining growth from the population. So part of the magic formula was the debt growth and the other was the population growth. So they've used debt growth. This chart, nobody understands, and it's never been copied on X, which is the bizarrest thing because it's the most incredible chart of all, which basically says that all government debt growth is basically a function of labor force participation rate.
Bitcoin has surged into what analysts are calling crisis mode, reaching an all-time high of $123,000 as the third week of July kicks off. This historic move follows a strong weekly close that locked in $10,000 in gains, pushing BTC/USD into price discovery territory after months of consolidation. While the dollar figures are staggering percentage-wise, Bitcoin's July gains of nearly 14% remained relatively typical, adding a layer of context to the current excitement. Yet the macro backdrop driving these moves is anything but ordinary. The U.S. is grappling with a mounting debt crisis, inflation pressure, and political instability. The national deficit reached $316 billion in May, the third largest in history, and the dollar has dropped 11% in just 6 months. As the Federal Reserve prepares for key inflation data this week, speculation swirls over Fed Chair Jerome Powell's future, with political leaders, including Donald Trump, calling for his resignation. These pressures are helping fuel Bitcoin's parabolic rise as investors seek alternatives to traditional assets. Meanwhile, Bitcoin's dominance in the crypto market has started to wane, dropping below 65%, sparking renewed interest in altcoins. Ethereum in particular has rallied back above $3,000, up 20% in a week. Traders are now eyeing $135,000 as Bitcoin's next stop, with some even targeting $145,000 this quarter.
Now, what's interesting is then, okay, so the debts keep going up. We know the forward look of where the labor force participation rate is going to go, and how it's being funded is liquidity. And this is Fed net liquidity. You're probably better to use US total liquidity because that includes the private sector because they're now using the banking sector. So what they're doing basically is debasing currency to pay for the debt. It's as old as the hills. It's as old as the story of economies. It's as old as the story of money. And it's happening at a very pernicious rate of 8%. So you kind of notice it, but don't notice it. But what's happening is asset prices keep going up optically because the currency is getting debased. Even if you look at real estate adjusted by the debasement by liquidity, it's basically a flat line. But wages are a variable input. And so what you find is that wages do not account for this. It's also the same factor that is driving P ratios that drives everybody nuts. Why are PE ratios going up over time? Because the P goes up because of debasement. The E is a variable and doesn't. So it always goes up in line with debasement. And we've shown that over time too. So this is the really big picture of what we look at. It allowed us to understand there's only two assets to own. And then we got to a further realization, which is, okay, if 97% of all of NASDAQ's price action is driven by debasement. It's the strongest factor we've ever had in any macro regime in history. Okay, great. That makes macro super easy. For crypto, it's 90%. So we've basically got a factor that's so powerful that nothing else matters. Brilliant. So then let's take the NASDAQ. If we've got one economic force, we take the NASDAQ, we divide it by by Bitcoin, it's down 99.97%. So you kind of get one asset allocation only, which is crypto, which is bizarre. In a macro world, we now think you need concentrated portfolios as opposed to diverse portfolios. In fact, diversification just destroys returns now because you've got one clear macro factor. So that's really what we're doing. And then we spend a huge amount of time working on the business cycle and the various components of all of this, how it comes together and where we are in timing of that.
XRP is capturing renewed attention as a highly rare technical setup signals a potential 60% surge toward $4.47, according to veteran trader Peter Brandt. He points to a complex pattern forming on the XRP/USDT weekly chart called a compound fulcrum, a structure made up of smaller failed patterns like breakdowns in minor ranges. This formation, although rare, historically precedes major price breakouts. If XRP maintains strength and holds above the keyed $1.80 support, Brandt believes this structure could resolve in a powerful upward move, taking XRP beyond the $3 mark and as high as $4.47. The optimism surrounding XRP isn't just based on charts. On-chain data confirms growing institutional interest, with wallets holding over 1 million XRP reaching an all-time high. Last week alone, XRP saw its strongest performance since November 2023, gaining around 25% amid broader crypto market momentum. This surge in large wallet activity suggests whales are positioning for a longer-term move, reinforcing bullish sentiment. Supporting this outlook, sentiment data from Blastnode's NUPL metric shows XRP transitioning from the optimism anxiety phase into belief denial, a psychological stage that often precedes further upside. Unlike previous cycles, there are no signs of capitulation or panic selling, indicating a healthier and more sustainable rally may be underway as XRP eyes its next major breakout. If you've been with us so far, a big thank you. Don't forget to subscribe for free to Bitcoin Zella for your daily news. The link is waiting below. That's all for today's crypto news. Stick around for more updates, insights, and analysis on cryptocurrencies. Share your thoughts in the comments, like this video, and subscribe for more exciting content.